Hey, good evening, guys. It's Thursday, early Thursday morning, New York time. I'm gonna go over Bitcoin really as quickly as I can. First of all, there's just so much to cover here. Um, I've been a little missing for 2 weeks. I've been really sick, so I've been trying to get over this. Just cold from hell. But I'm gonna go over this really quickly. The first thing is this is clearly the bearish count. Um, one of the things I want to talk about also is that there's so many counts right now with Elliott that there's just there's no way to get really any confirmation yet. So take this count as one of many possibilities. So I'm not saying that this count plays out. This count is my main count though, and I have there's several pieces of evidence supporting this. I know that we bounced. We've had this what seems to be, well, what is an impulsive move to the upside after a drastic drop, and there's so many bullish charts everywhere, and that's fine. I get it, but I just want to I want to caution you guys because there's no there's there's no confirmation that this market has reversed from um, a macro analysis, and that is me being completely objective and just on the weighing all the different pieces of evidence that I see. Um, it definitely looks better than it did a couple of weeks ago, but just as far as the amount of evidence, it's clearly in the bearish direction. Now, does that doesn't mean it doesn't change, but as of right now, to say that we're in a bullish market, that it's way too early for that. And I'll just go over really quickly just the evidence supporting the bulls. The bullish case that we are in fact in market reversal, bear market's over, and here we go. The main one being, and so many, I don't even have it on the chart because you guys all know where this is. The 200-week moving average or the 50-month moving average, which the time frame is about the same. So it's right about here now. It's climbing. We did bounce off of it down at this bottom here, and so far, excuse me, it's oh, excuse me, guys, it's held. So that is a piece of bullish evidence to support. We hit a major support and it's held so far, and we've had a nice bounce. One of the things with that is, if you look over here, just really quickly, how can we not bounce? Look at this void here, and I've talked about this void forever now. We fell straight through, and I mean, looking at just from a person, I've studied bubble cycles for almost 2 decades now, and one of the really quickly, a bubble cycle, for you guys that don't know, it doesn't mean that the commodity is a bubble. It just means that it's a bubble cycle. And, it's a massive run up and then a bursting of the bubble and a reset and a start of a new trend. But my point is that in every bubble cycle, there will be a natural attempt for the market to fill in volume voids. And this was a major one, and it's always been a major one. And that's why I've covered so many times we fell straight down, and it hasn't taken much volume to push back up through this. So one of my counts going all the way back to December had actually called this move up to, I said between 4,700 and 5,200 would be expected. And I actually changed my opinion on that just because we took so long. And I felt like, this move should have happened by now. And then lo and behold, it happens right after I pretty much feel that way. So that's Bitcoin, that's crypto, But one of the other pieces of evidence which I would strongly disagree with, that is the bullish count has this as an impulsive wave You know, 3, I haven't gone through this exactly. I mean, I have, but I just don't have it on this chart. The 5 would be, you know, somewhere up in the 78, 76, 7,800 area. You know, that's fine, and that is, if that, you know, that can still play out. And if it does, basically my point is here is this is not the time to be buying. We're so overbought. We're threatening to basically we're coming up on so many algo targets. And really quickly, without getting too much into detail, this entire market is driven by algorithms and algo trading bots, and their job is to take your money, to take retail traders' money, to take the average investor's money. That's their job. That's what they do. They are software written. And I mean, I'm not going to go through it because it'd probably take 3 days for me to go through it. But just trust me when I say the algos and the bots have been in control of this entire bear market, excuse me, and even the bull market, since this bear market started. I mean, they've just been abusing. They've been abusing all the gaps and all the voids in volume and all the swing highs, all the swing lows. They're constantly reaching target. That's what they're doing. They're clearly in control of this market. And I actually, in a couple of trades I made, I pegged the top to the dollar. And the reason I was able to do that is because I study algorithms. And if you see this, this was a major algo target right here. And I'll just show you really quickly where I'm pulling this from. It's basically a Fibonacci retracement. I'll pull that up really quickly here. I'll just warn you guys, this video is going to be at least 10 to 15, 20 minutes because I have so much to cover. And I'll try to go over as quickly as possible. But let me just get into Fibonacci here. All right. Basically what I did was I pulled the very first swing high, which this doesn't look like a swing high, but it is. I believe it's more, it's clearer on Bitstamp. But if you look at this, I pulled from right here, this top. Hope you guys can see that. This was the very first high, or excuse me, the very last high we had before the massive sell-off. So, excuse me, an algo is always going to file that into the back of his little programming brain, and wherever we bottom at, and of course there were bearish targets here for algos, and this is why we stopped here, I believe temporarily. But if you follow this, look at this. Look at this. I shorted this, and I shorted this 100 times. Right here, this first pop to 53.47, and you know, I shorted this 100 times. Why? Because my stop loss was $3 above this line. Because if we break this line, then I know that I am tracking the wrong algorithm, or I'm tracking a weaker algorithm. So I wrote this down 100 times to about here. I mean, I made about, geez, I don't even know, 800% on that short. And you know, that's not magic. That's just knowing what the algos are doing. And the reason I bring this up is this is an algo target right here. Golden zone, 618 to the 65. They love the 65 because everybody's focusing on the 618. So you'll get all the shorters coming in shorting the 618 with ridiculously high leverage, and then they get either liquidated, or they get scared because they're too over leveraged and they close thinking that we're going to continue up. So, okay, to the tick. I mean, look at, I mean, I can't zoom in close enough to make this not touch this line here. So, you know, clearly algo in play. And you can see it took a little while for us to break through this. And what we did was we did break through this. So now what happens is I am going to take the very next swing high, which is here. And I'll look at what we're driving at again. The next 65, we're driving here. So he did not reach target. Let me just make sure I'm still to the tick here, and I am. I would almost guarantee you that he's going to hit this target of 55.29 at some point. We may retrace. There are bearish targets. But basically, again, the reason I bring that up is because algos are clearly playing this market both ways. So, and the reason I bring that up is because that supports the bullish case. The bullish case, there are so many unrealized algo targets down here. And I'll just show you really quickly. If you want to take this same swing high to our swing low here, we have bearish algo target right here, 21.17 or so on Coinbase. And of course, if we break this here, we'll go to the next one, and we will still have this target. We'll just, get back to, we'll start focusing on the next algo. And that's basically the way I trade. I will never trade against an algo, and I will never trade without an algo on my side, because I can tell you right now, this whole move was an algo pushing this price up. No, it was not a whale. It was not, with the news and somebody, bought the crazy amount. No, it's not what happened. It was an algorithm. It was bots playing the fib levels and filling in volume gaps. It's what they do. They do it all day long. They do it on every single market, on every single exchange. And it's just easier for them to dominate crypto, especially when the volume is low. So, that's basically that. And an algo will never care about an Elliott count. They never will. But with that being said, I am looking at this count, and we could very well be done here, although most evidence shows that we're not done yet, that we still have more room to go up here. And if you just take my A up here, to the length of my A, the B, we're looking, golden zone is here, 65,618. We can go all the way to the 786, and that does not invalidate this bearish count here. And believe me, if we hit 7,400, the entire world is going to be bullish. Bear market's over. I mean, you see it now, just at 5,500 that we hit. We're bullish now. So, I'm not trying to be, a negative Nancy here, and I would love to be wrong with this, but you're better off waiting. In other words, if this is going to go with the bulls, 1, 2, 3, somewhere up here, 4, 5, 76, 7,700 or whatever, why not buy the retrace? Because no matter what, I mean, this is going to come back down, because if this is in fact full market reversal, all we're doing here, is putting in an enormous 1, and we're going to come down for a 2, and you're going to be able to get back in here. So, common retracement for a 2 is, 50%. Now, Bitcoin can be a real bastard and likes to put in really low 2s. But, you can at least expect to get back in exactly where we are now. The only difference is now you have evidence that we are, in fact, reversing here. So, it's a big difference. So you're going to miss out on this move. If this happens, so what? You can buy back in right where we are. So I always say better late than trapped when it comes to trading, and investing. Another problem or another issue I have with this, being an impulsive move to end this, 16-month bear market, is you're telling me that this is the 3, or it should go a little higher than this. This is the 3 to end a 18-month bear market with this much volume, with this much sell, sell-off volume. And another thing is, okay, many people have said, oh, there's the accumulation, blah blah blah. This is not a lot of accumulation. Just because we sat here for 3 months, if you look at the volume here, there's really not much accumulation going on. Sure, there's enough accumulation to pump the price up here like this, but for this is the 3-year with this volume. Maybe it is, but I would expect to see, if I'm looking for accumulation, okay, I'm looking for this. This is what I'm looking for. And I'm looking for green. And of course, it doesn't necessarily need to be in one candle. I'm looking for this with the price not moving. I am certainly, and of course it can be spread out through several candles, but I'm certainly not looking for this. A massive sell-off, volume decreasing as prices increasing. That's bearish divergence with volume. So, that's just that. A couple other things I want to go over really quickly. And I'm not going to focus on this Elliott count. Again, the reason why I have my target here is fib levels. This is a major algo target. This algo is strong here. And if, like I said, the reason I brought this up is, if you don't think an algo is playing this market, how did I get the top to the dollar on a 50 at the time it was $5,350 commodity? How did I get the top to the dollar? Because there's clearly an algo in play here, and they're clearly playing this market. So, this is a bearish target here for this algorithm, and they haven't had not one unrealized target in 16 months. So, we're gonna say that, okay, this one isn't gonna be realized based on what? And like I said, maybe it isn't. It's just the target. It doesn't have to be, but when something happens 99,000 times, to say it's not going to happen on the 99,000th first time, is whatever. But anyways, without going too much into that, I'd like to go into a couple of my favorite tools, excuse me, which I use all the time. I actually have them in my, let me find it here. I should have it. Yeah, I have it here. Okay. This is one of the best tools to use for a macro analysis. And no, this is not a macro analysis. This is just going back to the $10,000 area. And this is Gann squares. I've covered this many times. Gann was he was very outside the box. He used astrology and geometric shapes and whatever. But let me just show you here. Okay. Like I've showed you many times, these arcs here, I'm going to stop it right here. And just to show you guys why I stop it here is because you can see the validity of this arc here acting as support. And look how the market's following this here. Look at this straight up once it hits this. Okay. And we're going to go here. Look what happens again. Find support. Look at this. Follow straight up in here. What happens when the time is over for this bounce here? Fall straight down. Now this one here didn't really offer much. Just flat. And look at this. Once this is broken, straight down. Where did we bounce? Right at this arc here. Where did we stop bouncing? Where did we start falling again? Right at the end of this arc. All the way down here. All the way down here. So you can see also that this arc, we fell out of it. And I don't want to zoom in. See, zooming in messes this up. But you can see that we fell out of this and we've kind of tried to reclaim it. And now we're kind of just in no man's land here. So, that's another way to frame the market and what's going on. Um, and basically what this is showing is there's no support here. Um, I mean, it's just as far as a macro level. If you want to draw an uptrend, I would draw it here. I would just loosely draw it here. Some people will start it here, but I disagree with that because this is the strong uptrend here. And you can see, look at all this space here, gap. We need to fill this gap at some point. That doesn't mean that we don't continue sideways and catch up to it. But chances are, as overbought as we are right now, we're going to try to fill that gap here at some point. And the higher we go, the bigger that gap gets. And that's one thing that markets always do is fill gaps. So that's that. Now, I'm going to remove this really quickly. And I'm going to remove this also because you guys, you've seen it. You get what it is. I'm going to move all this stuff over to make this easier. And I'm going to slap a pitchfork on this. And I believe that I'm actually in log right now on the chart, which I'll show you why this, is kind of a difference here. If I just take swing high, swing low, where this trend started, one of the rules, or one of the, it's actually a percentage when it comes to pitchforks and trends, is you need to make this median line, this red line here. Of course, nothing says this move isn't over and we don't hit it up here. In fact, I think that we will. But the fact that we're not hitting this median line as of right now is bearish, because anything that does not hit the median line has basically an 80% chance or 75% chance of basically having a move greater or equal to the move that brought you up here. So you'd have to go right down here to this corner and you'd be looking for this, which basically is not the end of the world. It would be a double bottom. But, so that's another thing to keep in mind here. Another thing is I actually have added the 1.5. Shout out to Dale Convoy, one of my buddies who I was going over this before I made this video. But I know to do this, but I feel like in a trend that we're going to say the bottom is in and we're starting a bull market, this should never happen right here. This is weakness. This shows that this move, in my opinion, is corrective. We should not do this. We should not fall out of this like this. Yes, we did reclaim it, but this is not something you want to see in an impulsive move that's going to end this massive bear cycle, in my opinion. So, that's something to keep in mind also. Now I'm going to actually switch out of log, and I'll show you how this chart changes to where we, in fact, look at this. We actually do hit the median line. 2 taps here. Of course, I didn't zoom in, but it's close enough to where we're hitting this median line. 1, 2, 3 taps. So this looks, this looks a little more promising than the log chart. But again, we're also rejecting. So, but one of the good things is we are pushing higher each time and poking through it further. So, so that's that. And one of the other things, and I'm going to have to switch over to my other chart really quickly, which is it this one? Yeah, it's this one. Basically what I did here is now I do have to switch to log again here. And I'll show you guys what's going on here. I'm going to have to switch. I'll switch to the 1 day. Okay. Yeah, let me get all this out of here. Get all this out of here. I'll show you what I'm driving at here. Okay, this is the entire uptrend from 2015. Basically, the Mt. Gox crash here, recovery. Now, I could draw it from here, but it's even worse. And furthermore, when I draw trend lines, I want to draw from the uptrend, not the bottom sideways. I know I want the uptrend. That's what I want. And you can see how the market is just totally respecting this. Look at this. We got 1 touch, 2 touch, 3 touch, 4 touch, 5 touch. Same thing on the other side, on the top side here. Bursted through, touch, bursted through, reject, touch, touch, bam, slam right out of here. And, this led to just complete hysteria, mania. Here's the problem here. We've now broken this uptrend, and you can see the top of the channel you would have liked to see as support slammed right through it. And there was so much momentum on the way down that we slammed through the lower part of it and the support, which you would really want to see as support. So, this bounce here, okay, if you look at this, you guys think this isn't important here? Look at this. You think this is coincidence? Reject. Coming up on it again here. It seems to me, and we are pulling back here, which is not the end of the world. You would want, if you're a bull, you want to pull back here because we're very overextended. And any push up through this insanity, the resistances up here are extreme. So you don't want to be this extended when trying to push up through, broken supports, which are now resistances this extended. But you're seeing here, I mean, if you just zoom out here, okay, first of all, again, the volume breaking drastically higher than the volume on the bounce. Although there is nice accumulation in here. But again, if you zoom out, okay, really? I mean, I want to get, okay. This is going to end this bear market here. If you're going to 2014, which everybody is comparing, in a fractal, which I'm not saying that that's correct or incorrect. I'm not even going to go there. But if you are doing that, look at this capitulation that we had here. That's not here. We haven't seen that level of capitulation yet. And does that mean we have to have it? No, we don't. But, as far as analyzing bubble cycles, this is the biggest ingredient that you need for reversal, is people to not have hope and not think the bottom is in, and congratulating each other on Twitter that congratulations for surviving the bear market, blah blah blah. This is not how bear markets end. Bear markets never ever end in hope. They end in devastation. Unfortunately, that's just the reality of it. So we haven't seen that. Now this goes back to my point of accumulation. This is accumulation here. That's what you want to see. You want to see, the price not really moving and massive volume coming in. That's indicative of accumulation. This, to me, of course, just my opinion, this looks like disinterest. That it's just that people are not interested. The bears aren't interested in selling. The bulls aren't interested in buying. It just seems to me like it was almost like just a complete market disinterest in this area here. So, and again, this channel here is vital. This is the entire uptrend. Basically a 4-year uptrend that we have broken support and are now rejecting as resistance, and we are coming up on it again. So if you don't think this is important, I mean, you know, I don't know what to tell you. Now, one of the guys on one of our Telegram channels, he actually drew a median line in here, and it's basically the same. It ends up where my bottom line is, almost identical. So it's about the same thing. Now, oh yeah, all right. So I mean, that's basically just what I want to cover for now. I want to go into also just kind of what I'm looking at as far as the shorter time frame is concerned, and I'm going to go back to Bitfinex, because I feel like the algos respect Bitfinex more than any other exchange. Where do we have Bitstamp? Hold on, let me get to it here, guys. Coinbase. What the hell are they doing? Okay, here it is. Bitfinex. Okay. Jesus. Look at this sell-off volume here. So, but anyways, and we're also now we're under the point of control here from the volume profile. But what I'm basically looking at as far as right now, I'll just go over really quickly the bearish and bullish algo targets here. Let's see. Okay. Bulls got target up here. They hit their target and they did push through it, which is a good sign that there will be more gains to come after a pullback here. Oh, look at this. They hit target they hit first target here on this. But they're looking here. This is where the bears are looking as far as algos. This is where they're looking here. Just in the short term, and this would be secondary target here, 45.30 area. You know, so this to me is looking more like breakdown at this point. There's massive bearish divergence all over the charts. It's actually been that way for a couple of days now, and that's also one of the traps with reading divergences, is that they often take time to play out. So what you'll get is, you know, people they'll see bearish divergence here and they'll short, and they'll get burned. You know, like I said, it takes a while to play out. So, but you know, this pullback is necessary. This pullback is healthy. So let's see if, you know, bottoms in, we're going to the moon. Let's see if that sentiment stays in this market once we start a healthy correction here. So, you know, that's basically what I'm looking at now. This to me is absolutely the worst time you could buy, unless you're a long-term investor. You know, that's not for me to say. If you're buying Bitcoin and you're going to hold for 5 years and you don't care, and you know $5,000 or $6,000 is good enough for you, by all means. But if you're a trader, this is probably the worst time to go long. Sure, we could go up here, absolutely, and you may, you know, you might get some good profits here, but chances are we're coming down here. So, you know, I mean, look, like I said again, without beating a dead horse here, here's your uptrend. I mean, you have gap. You have big gap that needs to be filled here. At some point, you need to come down, consolidate before pushing up again. You know, and that doesn't mean that you have to do that. It's just that the more you do this, being overbought like this, the worse this is going to be, and the more momentum you're going to have on the way down to just completely obliterate this. And so basically that's that. But I think that's really all I want to cover as of right now. You know, I'm kind of sitting out of the market at the moment. I made great profits this week, just nailing everything. I was actually wrong on a trade. I actually shorted, and I did go over this with you guys, and I talked about this. Let's go back to the daily because it's been a while now. But I did talk about this being very bullish to me and being conflicted here. Just as far as formation is concerned, this is an ascending triangle, and I said it. And I hope I'm not still in log because this is gonna mess up. Okay, good. I'm not. You know, you'd be looking for this breakout here, which I did talk about, and it seems to me like this should be a little higher. But did I measure this? Yeah, I am still in log. That's why. Yeah, that's why. Okay, here we go. All right, so yeah, I mean, you're looking for this on the breakout, and you're looking for this move up here, which we kind of spiked through it. But the reason I bring that up is because on my last video, I said I am shorting here, and I'm shorting here and shorting here. And basically what I said was, as soon as we break this, I'm going to consider myself wrong, and I'm going to close my position and flip long, and that's exactly what I did. And I rode this to about what was it? Almost 5,000. I got out before 5,000, just on a psychological resistance type of thing. And I was high leverage, so I made a lot of money on that. But the only reason I bring that up is, again, you don't have to be right to make money. You can be dead wrong and make a ton of money. I lost 25% on my short and made over 900% when I closed and flipped long. So that was a net of, you know, 875, 860 with, you know, consolidation or whatever, but or compounded profit. Everyone calls it compounded interest, but yeah, I mean, the reason I bring that up is because you don't have to be right to make money, and you know, you just can't be. You have to be able to. You have to be prepared for your trade. Like, I came into this trade shorting this area, knowing that if this happens, that's it. I'm gone. I'm closing and I'm flipping. And so, you know, that's basically my point there is, you know, again, you don't have to be right. You just have to have a plan and an exit strategy, and just the ability to stay objective at all times. A lot of times when I'm taking a position, I don't care if I lose the trade or not. It's not important. You know, what's important is the risk reward and just the setup. So, but anyways, without getting too far on a tangent with that, that's basically where I'll leave you guys. It's been a long time, so I had a lot to cover in this video, but you know, thanks for watching. If you like my content, like, subscribe, any comments, welcome. Your opinions are very respected. You know, anybody that, you know, wants to show me more evidence that maybe I've, you know, overlooked as far as the bullish case, you know, by all means. I mean, that's how we all learn from each other. You know, we argue and you know, share opinions, even if they're conflicting. So, you know, with that, I'll leave you guys with that. And I actually expect a lot of sideways movement over this week. I don't expect a lot of stuff to happen. But, you know, it's crypto, it's Bitcoin, anything can happen. So if anything major happens, I'm always in Telegram. I'm always loading the charts. My partner Rado's always doing the same thing. He's just every hour he updates charts. So anyways, guys, thanks for watching, and I'll check you guys next time.